the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Vonnie Quinn, we're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with our friends Massar and Madison Mills. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Relatively tepid price action, Massar. Low volume here on this Thursday afternoon ahead of a big jobs report on Friday morning.
Yeah, I thought it was really smart earlier when you said, really a tight range. It just shows that investors not really looking to commit in either direction here. Having said that, looking for some outperformance as I like to do. Those names, those Chinese names that trade in the U.S., we talked about Alibaba earlier in terms of their AI initiatives, as well as Google. But the Nasdaq Golden Dragon China Index up about 1.5%. Keep in mind some economic data overnight from China. Their services activity surging to more than 2-year high. And we know that Chinese economy is so important.
Of course, but we also got to look at treasuries, right? Because it's the 5th day in the row that the 2-year yield has come down, the longest stretch since July of 2022. I believe it's a 49 basis point swing on the 2-year this week alone. So while we're not seeing a lot of action on the equity side, it feels like the bond market, as always, in the past couple of weeks and months, a lot going on over there, Vonnie.
Absolutely. Like I say, we've had this major swing from the 2-year out to the 10-year. Not so much, though, at the very, very front end of the curve. Those 3-month T-bills haven't gone down, but they also haven't risen. And many economists say that, you need to see those rise before you actually start a recession. There's the big roar.
All right, as we come to a close here on this Thursday afternoon, remember equity markets, the cash markets will be closed on Friday. So this is the final day of the trading week here. You're hearing the clapping and the cheering. The Dow Jones Industrial Average relatively unchanged on the day. It takes a while for these numbers to settle, but not much of a gain here on the day. The S&P 500 is going to finish decidedly in the green, up about 0.3%, or roughly about 15 points here on the day. We should point out on a weekly basis, this is actually the tightest trading range that we've seen from peak to trough for the S&P 500 going back to at least November of 2021. The Nasdaq Composite did see a little bit wider range and is going to close higher by 91 points or 0.8%. And Massar, the Russell 2000 going to finish the day higher by about 0.1%.
All right, taking a look at the S&P 500, as you said, tight range, low volume. But if I look at the S&P 500 as we start to get into some of the specifics on the trade here, you've got kind of an even split here, Vonnie. 265 names to the upside, 235 to the downside. If I look at some of the top performers in the S&P 500 in the past 4 days, you got energy names and healthcare. That's kind of a feel of what the trade was like this week.
Exactly, and that continued today, Carol. It seemed like a market without all that much conviction, just the conviction that it didn't want to go that much lower, wanted to stay above 4,100, which it did, 4,104, practically 4,105. You mentioned some of those names. We did have utilities higher up by 0.7% as a group. The transportation index up 0.9%. Media and entertainment up 2.2%. But most of the upside was really thanks to the mega tech names like Alphabet. And then some of the banks. First Republic was one of the top movers as well, up 4.3%. You mentioned the energy companies to the downside. The energy index, in fact, was the worst performer, down 1.5%, followed by telecom services down 1%, and then things like materials and autos as well.
All right, so let's get to it. Some of those individual names I talked about, I think Google earlier. Google ending the day with almost a 4% gain, up 3.8% to be exact in the Thursday trade. Top of the Nasdaq 100, top of the S&P 500. Not sure that there was really a specific catalyst, although you did have the company's CEO, Sundar Pichai, talking to the Wall Street Journal, talking about AI intelligence features into its flagship search engine. So everybody is agog, if you will, when it comes to AI. Alibaba, we
talked to Carol Massar.
I will get you there. Alibaba also up more than 4% in today's session. We talked about this as well. It's planning to launch its own version of ChatGPT like AI tool this month. And then AMC Entertainment, up almost 21% in today's session. There's a lot going on between its preferred shares and also its common shares, a court ruling, the company continuing to evaluate next steps. There's a lot going on in the specifics. I'm not going to get into it, but it is important in terms of the trade because there's a distinction. The common trade higher, the common stock, I should say, the preferred lower, and they've been looking to kind of close that, combine that, but a court ruling saying differently. But nonetheless, the common shares up almost 21% today.
Well, I know we've been talking about it all day, but I have to continue to look at Costco here in my decliners, down just over 2% on the close. This to me, the big question here is the health of the American consumer, right? This is a company that traditionally we've seen middle to upper income individuals at Costco. Does this indicate anything about us potentially heading toward what some of our guests have been calling a rich recession, seeing that the economic slowdown is going to be impacting those higher income earners moving forward? And sticking with the consumer story, Levi's, we've been talking about this, Carol, shares slumping as much as 16% after they reported weaker than expected first quarter gross margins. They've got elevated inventory levels. They've got costs related with restructurings, but our analysts do say that they're going to see a correction on that throughout the year. And then I've got to go back to tech here. Airbnb having some issues today, falling as much as 6% earlier today with a report detailing issues with the company, including that it's increasingly reliant on professionally managed properties that are also competitors. Pairing those declines a little bit, though, after Bernstein refuted that report. But I also have to wonder if the Airbnb story is just the tech sell-off that we've been seeing as well.
You go back to the broader market. We were just speaking with David Leibovitz over at JP Morgan Asset Management, making clear how he saw the correlation between what was going on in the equity market and what was going on with yields. A big drop in yields here on the week. In fact, if we look at the sort of the middle of the curve and that 10-year yield, you're basically talking about a 7-day rally right now that's taken that 10-year yield down from basically around like 3.5% down to about 3.3%. The differential that we're seeing on the 2-year yield also quite remarkable. We did see a yield tick slightly higher on the 2-year on the day, but remember, we were above 4% on a closing basis, settlement basis just last week, a week ago, last Thursday. And remember, on an intraday basis, we were above 4% at one point this week. In fact, this is actually one of the fatter trading ranges that we've seen for the 2-year yield, at least I think for the year so far, something like 49 basis points. I'll double check that, but we're now really just talking about something like 20, 23 straight weeks where we've seen this type of relentless rally. Something to keep an eye on because that really is feeding into the broader concerns here about macro conditions in the equity market.
And guys, obviously 16 hours from now, we're going to be dripped in sweat. Obviously, even though we don't have to work for most of us, waiting for those numbers to come out, right?
What are you going to be doing, Vonnie?
And obviously waiting for those numbers to come out.
Okay.
But
in your wedgie jeans?
Right, maybe.
Yeah, okay.
Stonewashed.
Levi's.
But there is more coming, right? So we shouldn't get too excited. There's a whole week of data next week. We're going to get consumer credit as well tomorrow. And next week we have things like CPI and PPI and all sorts of...
Yeah, I'm actually glad you bring that up because everyone's so focused on this jobs report. But, I mean, you kind of forget about some of the other economic data that we're going to get next week, including, like you said, retail sales, CPI, PPI. But then also, of course, the start of the earnings season. I mean, a lot of these companies are really going to have to lay bare what really went down in Q1.
Yeah, we were talking with our Molly Smith of our economics team here at Bloomberg earlier, and I'm like, yeah, I'm looking forward to, the earnings story. And she's like, hey, I'm looking forward to CPI and what it says, because I think every data point is really important, and it certainly is to the Fed. And every data point that gets them closer to the next Fed meeting will ultimately determine what they do in terms of monetary policy.
Well, we've been accusing the Fed, or our sources have been accusing the Fed of being a little bit too data dependent. So every single piece of data is absolutely critical. And tomorrow's jobs report is the last one we get before the next FOMC meeting, making it all the more critical.
Well, and of course, that warning from the IMF has to have sent a chill through all sorts of policymakers as well as us, obviously. And the idea that the dollar index is very dependent on things like jobs and so on. And that's going to have an impact on outside economies, which will have a feedback loop on our economy and other economies. There's so much going on, and there's so many things that crisscross and tag each other at the moment that it's almost hard to keep track of.
And let's keep in mind, I mean, you talk about that next Fed meeting on where the decision, I think it's on May 3rd. But the idea here that how many things could happen between now and then, nobody really obviously predicted what would happen with SVB, Signature Bank, et cetera, et cetera. That's something the Fed has to factor in. OPEC Plus, of course, surprised last Sunday. That has to be factored in. So, I mean, who knows what can happen? I mean, that's 4 weeks away, Madeline.
Well, can I just, what you said earlier?
Carol, why don't you talk for Maddie? Go ahead.
Please, by all means.
Stop. No, but what's interesting is think about what has changed dramatically in terms of rates, that 2-year, right, or even the 10-year, but the 2-year in terms of 3 weeks. So if we get some different data sets, could we go back above 4%? I think it's a good point. We just don't know exactly what's going to happen.
I was crunching the data. I just wanted to make sure I got this right.
Maddie would have said that much better than I would have.
On a daily basis.
That was perfect.
What?
On a daily basis, the 2-year yield has swung at least 10 basis points or more for 23 straight sessions.
And that's with
This is
it's not
the
normal.
sovereign debt of the United States of America the world's largest economy, presumably the world's safest debt instrument out there.
Right.
23 straight sessions.
And in amounts not seen since the financial crisis. We're
Yeah.
talking $1.2 trillion a day being traded here.
Yeah.
And what is the bond market seeing that the equities market is choosing not to see and that the Fed is also not seeing, right?
Yeah. Well, I think, can I say it? Recession. I mean, that's, you know, I'm not calling it, but I'm just saying that when you look at those moves in yield, and more importantly, the steepening of the yield curve, at least on a historical basis, that's typically what that means.
Jim Bullard doesn't think we're going to tip into a recession.
Is he speaking again today?
He did.
Tomorrow?
But then
No,
we
he
had Jamie
did.
Dimon earlier this afternoon
he doesn't-
saying he's
Yeah.
thinking recession.
But Bullard says he doesn't think the tighter credit conditions.
I'm going to wait for his next
Is
meeting.
that
Maybe
what's
something
priced into the
Yeah.
equity markets? I mean,
Yeah.
Happy Easter egg hunting, if that's the thing you do. Okay, everybody? All right. Of course, we'll get the jobs report
see you
tomorrow
on
morning.
Monday,
Bloomberg
Carol.
will be on it. I will see you on Monday. Have a good long weekend for those who are taking a long weekend. That's a wrap for our cross-platform coverage. Beyond the Bell, Radio, TV, YouTube, and Bloomberg Originals. We will see you again, this team, same time, same place, on Monday.